Hi, in this particular video I want to discuss cost classifications. Costs can be classified in different ways. Number one, costs can be classified as either direct or indirect costs, fixed costs and variable costs, and costs can also be classified as production and non-production costs. Costs can also be classified as functional costs. And then we'll look at classification by responsibility as well. So let's start. Cost classification. Classification number one. Costs can be classified as direct costs and indirect costs. So what is a direct cost? A direct cost is a cost that can be traced in full to a sellable cost unit or product or service that is being costed. Examples of direct costs include direct material, direct labor, direct expenses. The total of all direct costs is called prime cost. So what's a prime cost? Prime cost is simply the total or the sum of all direct costs. So a direct cost can be directly traceable to a unit of a product. Directly traceable to a unit of a product. So if you're looking at the product, the cost that you are able to directly relate or link to a particular product, those costs are called direct costs. For example, materials. This includes the material that is used to make a particular product. Labor, direct labor includes the labor cost for the people were actually involved in making that product, excluding the supervisory costs, labor costs, and of course other direct expenses that can be directly linked to a particular product. What are indirect costs? An indirect cost is incurred in the cost of making a product or producing a service. It cannot be traced directly and in full to a particular product. We have indirect materials and indirect labor. Indirect materials could be things like cleaning materials that the company can buy, which cannot be directly traceable to a particular product. Indirect labor could include security, supervisory labor, and other labor costs that are not directly linked to the production of a particular product, plus other indirect costs. The combination of all indirect costs is called overheads. And we have also other overheads such as administration overheads, selling and distribution overheads, and the total production cost, of course, is going to be the combination. The total product cost is going to be the combination of the total direct cost, which is prime cost, plus the total of the indirect cost, which is called overheads. That's cost classification number one. Let's look at cost classification number two. Costs can be classified as either fixed or variable costs. What is a fixed cost? A fixed cost is a cost which is incurred for a particular period of time, and the cost does not change in connection with the changes in production levels. So the cost is fixed within a given period of activity. Fixed costs is unaffected by the changes in the levels of activity. So whether you increase activity levels, the fixed cost remains the same. The example of a fixed cost could be a rental cost. When you are renting a premises at a fixed cost, it doesn't matter how many units you are producing in that premises. You can produce one unit, you will still pay the same amount of money. That's a fixed cost. The other example of a fixed cost could be business rates or salaries of directors and other employees that are on fixed pay. If the pay is fixed, then it doesn't depend on the activity level or output of an individual. You will still pay that individual the same amount of money regardless of what they have produced. That's an example of a fixed cost. So the fixed cost does not change with the changes in activity level. What about the variable cost? A variable cost is a cost which tends to vary with the levels of activity. So the cost here changes with the changes in activity levels. If you produce more, the cost tends to go higher. If you produce less, the cost is less. Examples of variable costs could be material costs, direct material cost, because the amount of material you're going to use depends on the number of units you are producing. So if you produce more units, you're going to use more materials and hence a higher cost of materials. Direct labor, the labor cost depends on the number of units that is produced. If you are producing more, you tend to pay more in terms of labor costs or hire more people to produce. If you are paying your sales team using commission or on commission basis, the commission is simply the percentage of the amount of sales that has been achieved by that particular salesperson. So that would tend to vary with the changes in activity level. So if the salesperson sells more, then the commission will be higher. That's a variable cost. Number 3, costs can also be classified in terms of responsibility. Cost classification by responsibility. A responsibility center is a department of an organization or function of an organization which is the direct responsibility of a specific manager. That's a responsibility center. And there are 4 categories of responsibility centers. We have got the cost center, the revenue center, the profit center, and an investment centers. A responsibility center is just a department or function or part of an organization which is the direct responsibility of a specific manager. So let's look at these responsibility centers. Number 1, cost center. A cost center is a collecting place for overheads before they are analyzed further. So the manager of a cost center is responsible for costs only. The manager of a cost center is responsible for costs only. So cost center managers are responsible for costs only. A revenue center is a collecting place for revenues before they are analyzed further. A manager of a revenue center is responsible for revenues only. A profit center is a part of an organization whose manager is responsible for both revenues and costs. And an investment center is simply a profit center with additional responsibility for capital investments. So the manager of an investment center is responsible for both revenues, costs, and investment decisions. Responsibility for costs and revenue, also responsibility for capital investment and financing. That's the manager of an investment center. So that's about cost classification. Now let's talk about the other parts that relates to cost classification, of course, and these includes, number 1, a cost unit. What's a cost unit? A cost unit is a unit of a product or service to which cost can be related. That's a cost unit, the unit of a product. You need to understand the difference between a cost unit and the unit cost. The unit cost is the cost of that unit of a product. The cost unit is simply the unit of a product. So for example, if a hotel room costs $200 to operate, the hotel room is a cost unit. The $200 is a unit cost. So that's the difference between the cost unit and the unit cost. A cost object is any activity for which a separate measurement of cost is desired. That's a cost object. For example, the cost of a product, the cost of a service, the cost of operating a department, that's the cost object. So the cost object is any activity. Cost object is any activity for which a separate measurement of cost is desired. All right, so we've looked at those elements that relates to costs, and we've looked at the cost classification. The last one I would love to talk about is cost classification, where costs are classified as either fixed or variable costs. We can also have a mixture of variable and fixed cost into one cost. For example, a total cost may include the fixed cost and the variable cost combined. So this is called the semi-fixed or the semi-variable costs. We'll look at this when we look at the cost behavior as well. That's why we'll look at how you can even separate a semi-fixed or semi-variable or mixed cost into a fixed and a variable cost. Having said that, let me look at a few questions that I noticed from the past question papers that we need to practice. I got two questions. One, I got it from the June, this is June 2018 exams, DA5. And the other question, I got it from the December 2017 DA5 question paper. So let's try to see how we can answer these questions that relate to the topic we've just talked about. So the first question says, explain a cost center and a cost unit. Explain a cost center and a cost unit. I'll give you a moment to just think about that and see how you can explain the cost center. Well, you are right. A cost center is a product or service or function or an activity or item of equipment whose costs may be attributed to the cost unit, and the manager of a cost center is responsible for costs only. So a cost center can also be described as an individual activity or group of similar activities for which costs are accumulated. Examples of cost centers can include production department or machine or group of machines, a department, a group of machines in a department, a work group. All those things can be considered as the cost center, or even a geographical area or part of a business that can be considered as a cost center as well. Now, this question had 4 marks, so meaning that when you describe the cost center, it's appropriate you also give an example of a cost center. Let's move on to the cost unit. What's the cost unit? The cost unit is a unit of a product or service in relation to which costs are ascertained. That's how we can describe the cost unit. Or you can as well say a cost unit is a unit of a product or unit of a service to which costs are ascertained by means of allocation, apportionment, and absorption. We'll be talking about that also in the later sessions. An example of a cost unit could be a specific job, a contract, unit of a product. It could be a car. That's a unit of a product as well. That's a cost unit. So that's how you can answer those questions. Remember what I've said, 4 marks there. You need to describe a cost center and a cost unit and also give examples to be able to maximize the marks allocated to that. Let's look at the other question that came in December 2017 in relation to the topic we've just talked about, cost classification. Define the following terms: cost object, unit, cost center, revenue center, and a profit center. Obviously, this is quite easy for you. I'll give you again a moment to just see how you can describe those elements that are given or items that are given. Well, you are right. What's a cost object is any activity for which a separate measurement of cost is desired. That's what we said. Any activity, that's a cost object. Any activity to which a separate measurement of cost is desired. What's a cost unit? A cost unit is a unit of a product or service or time in relation to which cost may be ascertained or expressed. Remember what I've said, a cost unit is different from a unit cost. A unit cost is the actual cost of that particular unit of a product. A cost center is a location, person, item of equipment, or part of the department for which cost may be ascertained and used for a purpose of cost control, and the manager of a cost center is responsible for costs only. Revenue center is another type of responsibility center where managers are mainly accountable for both costs and where managers are accountable for revenues only. Managers of a revenue center are accountable for revenue only. All right, manager of a revenue center are accountable for revenues only. A profit center is a segment or part of a business, part of a company for which manager is responsible for both costs and revenue. That's a profit center. Manager of a profit center is responsible for both costs and revenue. This is very easy for you to remember. Just remember that a cost center manager there is responsible for costs only. A revenue center manager is responsible for revenues only. A profit center manager is responsible for both costs and revenue. An investment center, the managers there is responsible for both costs, revenue, and capital investment decisions. Thank you.